Good morning, good afternoon, good evening, traders. I hope you're doing exceedingly well on this beautiful June morning. And I hope that the drop in the crypto markets, not just the crypto markets, but the markets in general, hasn't affected you too negatively at this stage. But I wanted to share 4 reasons why I think there is a zone for Bitcoin that could be the bottom. And I think that that bottom could be between 21,000 to $23,000, and we're going to look at levels below that. That if 22,000, 21,000 doesn't hold, where we could see targets going down to. So I'm going to start out with this 200-day or 200-week moving average. So you can see I've marked it on my chart here, and it's indicated by this blue line. So historically, if we have a look at Bitcoin's all-time history index, you can see that, okay, over here it's wick down on the 29th of March 2020 down to that 300 MA, but it's hardly given a weekly candle close below that 200 MA. And if we go back historically, there we can see the low touched the 200 MA on the 21st of January 2019. If you go back, all the way back, you can see the lows have always come and touched on that 200-day MA. Now, you can argue, but we had a close below here. But if you actually put on a line chart, you'll see that it tells a bit of a different story. Not quite as low as what we think. So a line chart, you can always see what the accuracy is, and you can see that we've touched down to that 200-week MA. And obviously the history goes up until just before middle of 2014. So that's one reason that I can see that 22,000 or that $22,000 area is possibly going to be the low for Bitcoin. And as you can see, we've marked the chart there. And what could come and happen is that as the price starts coming lower and possibly getting a bounce, we could bounce below that area and come up. And remember, if we start coming up, this 200 MA will start moving up very, very slowly. We might have a little curve down initially, but eventually as the bottom comes in, whether it be 22,000, 16,000, 19,000, it has to start moving up eventually. The second reason why I think, actually it's 4.5 to 5. The second reason why I think that we could get a bounce in this area is that if you have a look at where the support levels are, we've got a support level here at 23,700. You can see it's a daily level, right down to 19,200, 19,400 is a weekly level. We've got quite a lot of resistance there, or support there, should I say rather. As price comes down, it should find a little bit of support there, not much, and it could find a little bit of support there. But the second reason I think that this zone could be close to the bottom is because of this fib retracement. And let me turn back on my candles, and I'm going to turn off these moving averages, turn that off. And as you can see, I have drawn a fib all the way, literally from Bitcoin's opening price, and when it opened up at 1 cent. So I'm not going to zoom in all the way there, but trust me, it's if you zoom in, it's at right about 1 cent. So I pulled it right from the beginning of the 1st of August or 1st of July 2010 all the way to the all-time high at $69,000, round about there. And look where our golden pocket reversal area is. You can see our 0.618 and 0.66 fib is right in this area, 23,356 right up to 26,000. And you can see obviously today we've already broken that. So we generally, if this is going to act as support, generally it will come down and it could wick down below that area and come up. And you can, as you can see, right down to that 21,000 area is a possibility. So that's the second reason why I think that this zone is a very, very important zone. And as you can see, I've marked it on my normal chart. I'm using the index chart just because we have the history all the way to 2010 and I can't mark those fibs on a normal chart in most exchanges. So I've marked it on my normal chart here. The third reason that I think that $22,000, $21,000 area could be the bottom is if you look at our RSIs. Now, historically, if you go to the weekly, you can have a look here. The lowest point that the RSI has been to historically throughout the history of Bitcoin is not below this 28.26 point. And let me expand this RSI a little bit so you can see what's going on here. You can see the low point there, January 2015. We came right close to it and then we had a pivot up. And right now we are nearing that area. So what could happen is that we could come and touch this 28.25 line and bounce up. Obviously, history tells us a story, and we could have a situation where it wicks a little bit further down. But this gives us a very, very good indicator as well as to where the bottom may be. And as you can see, if you compare these RSI weekly low levels and the pivot points, it matches up to a lot of the low points on the chart. And as you can see there, we're at a low point. So I would say just hang in there. Am I saying to you, buy these dips? No, I'm not saying that to you. I personally sold most of my crypto holdings a couple of weeks ago. I saw when Bitcoin was ranging in this area, I knew that there were lower prices coming. I hold a little bit of Bitcoin, a little bit of BIT, but I sold all the rest of my crypto holdings. Why? Because I knew that I'd get an opportunity to buy at a lower price. And I'm going to wait for a reversal sign in those areas. I'm not just going to buy blindly when it reaches those areas. But the fourth reason why I think that this could be close to the bottom is our CME gaps. So CME gaps, historically, if you have a look, they've got a history of being filled. And let me just switch on the CME gaps. You can see here, we've got a gap here and it was filled. We had a gap here and the price came down and filled that again. We had a gap there and it was filled there. We had a gap there and it was filled there. Two gaps that I'm seeing on the CME chart that currently are not filled, and I believe that they are going to be filled. The first one is here between this 26,400 area and 23,100, and it's waiting to be filled. And you can see as prices started dropping today, we've had a partial fill, but I think we are probably going to wick down at least to that $22,000 area. The second area that I'm seeing that hasn't been filled yet is this that $54,000 area. No, that has been filled. My apologies. I was looking for this. I actually marked this. Actually, that is waiting to be filled. So let me copy that there. I'm going to do that and that. So I spotted a second one. So there's three gaps. So to the downside, obviously, we've got that one waiting to be filled. We've got a gap that happened over the weekend between the $28,000 and $27,000 area waiting to be filled. Expect after the drop or even as we range in this area that this could be filled, come down, and possibly go up. We've got this $35,000 area to the $34,000 area waiting to be filled. And of course, around about here at the $54,000 and $50,000 area waiting to be filled. So those are my targets. I will leave these targets open, these levels open, mark them down on your chart. If this level of $23,000 to $22,000 doesn't hold, we could see possibly price move down to the $19,000 area. And if that doesn't hold, we've got support at $11,000, $12,000 area and all the way down to $9,000 area. Now let's hope that price doesn't go all the way down to there, but we have to prepare for the possibilities. So I'll turn on those levels once again, mark those down in your charts, and I really hope and pray that you are finding good trades during this time. Remember, you can short, you can long. Make sure you know where the levels are. Don't irresponsibly go and trade all of your balance. Make sure you have a very good risk management in place. And I wish you all the best of success and have a wonderful day, and we'll chat tomorrow.